What's going on, everybody? JT here, and today's episode is going to be really, really interesting because typically I sit down here and I interview guests on this channel. However, today's episode is going to be a little bit different. We're going to flip the script, and I will be interviewed by co-founder of Niftgen, Christian Casini. Now, it's a fantastic episode because it's very rare where I am being asked questions and forced to answer. So you're going to find out a lot about my background, how I got into YouTube, how I found Algorand, what I think of other cryptocurrencies, my thoughts on the current FTX disaster that's currently plaguing the cryptocurrency ecosystem, and a whole lot more. It's a lot of fun. We end on a positive note, so I hope you enjoy this episode with Christian Casini, who's interviewing me, which hopefully you find of interest. If you do, smash that thumbs up button, consider subscribing to the channel, and sit back and enjoy the episode.
Thank you for tuning in. This is Christian, co-founder of Niftgen. This is JT. Today we're gonna flip the script where I'm gonna be the one interviewing him as opposed to the other way around. So I think it's kind of like to get this started here. Like the question is JT. It's kind of like, let's start about like, why did you choose to do content video creation, right? What would you say was the one point in your life where you said, okay, I want to get involved in this and do it? Take it away.
Well, this is a really interesting question because honestly, I was just thinking I needed a change in my life. So, a lot of people don't know this, but for a good 8 years or so, I spent a lot of my time cooking in various restaurants and various hospitals and nursing homes and things of the sort. And I just kind of wanted to get out of that life. So I decided to I decided to go and get my education to become a realtor. And at the same time, I decided to start a YouTube channel. And part of that was because for I don't know, maybe about 8 years or so, I've been investing in equities in the stock market, and then I got into the crypto market around 2017. So finance and investing has always interested me, and I decided, you know what, maybe I'll start a YouTube channel just based on, with the idea to educate people on the generals of investing. So my first channel, my first video, my first video was about basically the who, what, when, where, and why of investing. So it's basically just meant to be a generalized introduction to, why you should invest, how much, maybe, of course, no advice, but basically just the general concepts of it, essentially. And that was basically the idea behind starting the channel, was to educate people on why to invest, how to invest, how to, read fundamentals like balance sheets and things of the sort of companies. And my second video, actually, I ended up, I know you're probably going to ask this. So how did I end up making videos for Algorand? So my second video, I just happened to stumble upon Algorand, and I was like, you know what? I'll just make a video about Algorand because there's nobody, I didn't find any content about it on YouTube at the time. So I was like, I'll make a video about Algorand on what I found and what I researched. I made some, and I think Michael Jordan in the algo family in the community, he sent me, I believe, 50 algo on my first video, and that kind of incentivized me more or less to make more content. So I kept making Algorand videos, and it snowballed from there into what it is today. But it was really interesting because the intention was to be a generalized investing channel that just happened to stumble upon Algorand and then got further incentivized by the community being so great in giving me algo. I think on the first 2 or 3 videos I made about 150 algo just in donations. And at the time, algo was like $1.20 or something like that, or close to around that point. So I was like, you know what? I'm not making money on ad revenue yet because the channel wasn't monetized. So I was like, you know what? Maybe I'll pursue this avenue even further. And here we are today.
Oh, fascinating story. Yeah, like for investing advice and stuff like that. It's like a really good topic and stuff like that. Like I went to school to learn finance and everything because I wanted to go to Wall Street originally. So that's definitely interesting. So yeah, it's cool. Like you pretty much like stumbled onto Algorand, and it's very interesting how pretty much like the moment you came in, the community was very supportive of you. Like I think you're probably the only person that's interviewed Stacey Warden. I don't know of any other one that's actually interviewed her.
There's a chance Cooper Daniels might have. Yeah, I think he has. Yeah, I believe he has, because I remember actually distinctly the episode where they were both wearing the nice like Hawaiian-like shirts that Cooper likes to wear. Oh, and she put a plant behind her, so they both kind of had the same scenery. I was a little bit jealous that she didn't do the same for me. Although I'm not sure what she would have done.
Gotcha. No, yeah, of course. And like, so when you first came in and started doing like, when you got involved in the Algorand ecosystem and started making videos, how did you like talk a little bit about like how did you like meet the other people? Like I know you do stuff with like David and Will for the next blog, but I also know Monty and Cooper Daniels. How did you guys like meet? I'm really curious to know about that.
You know, that's a really good question that I haven't put too much thought into because everything happens so fast that I feel like you started the space without knowing anybody, and now fast forward to today, and I have a lot of connections within the space, as you mentioned. And I guess the short story of it would be I stumbled upon, at least for example, for David and Will and Monty, I stumbled upon their YouTube channels, and they must have stumbled upon mine or Twitter as well. And just over time, we've started forming communications. I believe I commented on maybe David's YouTube page or something of the sort, and I think he reached out to me because he was already doing something with Will, and I believe he reached out to me, and then we started the next block together, which actually took maybe 5 to 10 episodes in before we actually decided to launch it as the next block. We were just doing it as like Algorand ecosystem updates on our channels. People can go back their previous episodes before the next block that were called Algorand ecosystem update or something of the sort. And Monty, how did I meet Monty? Similar thing. Of course, I stumbled upon his YouTube, but I met David in real life in Decipher last year. I met Monty, I believe, also in real life last year. And then I've done actually a lot of 100%. I met Monty at Decipher last year because we did a show at his Airbnb, and then I also ran into him again in real life at the Times Square Algorand event, where they basically shut down Times Square and turned it into a pretty beautiful Algorand marketing ploy, honestly. But otherwise, if I'm thinking about developers or other people in the space, I've just reached out to them, and honestly, in the very beginning, I was really, really shocked at how many people would reply. So basically, if there was 10 applications or 10 founders or 10 coders that I wanted to talk to, I'd find their contact, I'd reach out to their email, and honestly, maybe like 7 of them would reply, "Yeah, I'm interested," which kind of blew my mind. So really, the fundamental moral of the story, I guess, here is if you want access to someone, just ask for it. And you'd be surprised how many people are actually going to give it to you.
Gotcha. No, yeah, it's good. It's really great to know like the background, how you guys all met and everything, because you guys are very active in the Algorand community and everything. I mean, most of the projects, like I think, like all the projects that I've also got to know on Algorand, like vendable NFT domains, it's like I kind of like found out about them from your guys' shows, the next block. So I have to say, like, thank you guys for like really being the voice for the other Algorand projects here in the ecosystem. That's really great. And I've been on your show pretty much like multiple times, and also like on the next block on everybody's shows. So thank you for like all the passion you guys put in to educate people about the projects, just to put that out there.
Yeah,
Now
of
the
course, I
one
appreciate that.
No, yeah, of course. That's also why we're starting Niftgen. It's pretty much like a hub for you guys to better monetize your content, because this also brings me into the next question. Is that 98%, there's over 60 million video creators on YouTube and Twitch combined, and over 98% of them earn less than the United States poverty line of $12,000 per year. And that's really crazy, pretty much, like considering all the good content you guys make. And it's funny because YouTube over the years, they brought on what I like to call, like, they call them advisors, right? Which is actually big YouTubers on trying to determine, so why aren't video creators really making money? And that was 5 years ago. And the situation hasn't gotten better at all. So the question is like, what do you think they're doing wrong, right? Because I mean, my view is that, okay, you guys brought on these advisors, which are YouTube creators, to make YouTube good for them, and it hasn't worked out at all. So why do you think it's not working out?
That's a really interesting question because YouTube has, and well, it did have, I think it still does, honestly, just because it has so many eyeballs on it, but it did have at one point a lot of potential. And I would agree that unless you're, one of the bigger ones, it's really not too beneficial to be a content creator. At least solely a content creator. That's why you see content creators that have sponsorships. I'm sponsored on this show. People do ad reads during their show. Maybe they'll sell merch or whatever. So they use their show to get eyeballs on them, but it's also to get that, so that way they can monetize it in other ways, whether they bring them to Patreon or whether they, maybe in the future bring them to Niftgen. essentially what I'm getting at is they're not making that money on YouTube alone, and it's partially because they don't pay, in my opinion, appropriately for the value that the content creators generate. So they have to seek that value elsewhere. So from third party sources like ads, like I mentioned. But I don't know. It's really hard to answer where they went wrong because to some degree, it's probably just an answer of greed to some degree. But I don't really understand their business model enough to, I suppose, speculate on that one.
Gotcha. No, yeah, of course. Yeah, I mean, I think the reason where they went wrong is that so YouTube, yeah, so it's free to use, right? But if you're not paying for the product, you are the product, right? And this is kind of the things that I try to tell people who aren't video creators is that YouTube was not architected or designed for video creators to make money. That's not the intention. Whether we like it or not, that's not the intention, right? It's meant to create an ecosystem where you have a bunch of eyeballs looking at stuff, right? Which is why companies advertise on YouTube, and like YouTube makes a lot of money, right? But they're the only ones. Like the platform is not designed for people to make money off it, especially if you have less than 10,000 subscribers. If you have less than 10,000 subscribers, you probably make less than $20 a month on YouTube, and about 99% of YouTubers have less than 10,000 subscribers. So it's like, I mean, yeah, it's impossible to make money on these platforms. And the core problem is if you have this algorithm of ads like YouTube does, it doesn't really matter what you do. Creators are not really going to be able to better monetize their content. And that's a big problem for YouTube because essentially, like, what are they going to do? Get rid of ads? Yeah, that pretty much means
Right.
like flipping their whole business model, right? So I don't think they're ever going to do that, to be honest. Plus, like, I don't think Google would even allow them. So that's what Niftgen we're trying to do to make it better. Talk a little bit about like how expensive is it to be a video creator? Because many people just go, "Oh yeah, I just put out my phone and I can stream, right? Very easy. It's very cheap to be a video creators." Please, like, educate the public on how expensive it is for people to start out.
I mean, I have to say, I got to preface it with saying that there are, of course, the lucky people that do go viral with just a video clip off their phone or something of the sort. So I don't want to say it can't be done that way because uh, people have done it. I can't imagine it's the most successful route to do it that way. But typically, I mean, generally, you have the camera I'm looking at right now that's at pretty close to $800 to $1,000. I've got a teleprompter over there that I occasionally use. I have a couple of green screens, the two lights over there, uh, probably at least $300 or $400 each, maybe, or altogether. I'm really not sure, but all in all, between the lights, the cameras, the laptop to run it off of if you don't already have one, the streaming platform, because the platform we're using right now, StreamYard, that's a subscription based fee in and of itself. You're looking at upfront costs of probably like 2 to 3 grand minimum if you use like lower grade stuff, and then if you have editing software, streaming software, and so forth, you're looking at another 150 $200 a month in subscription fees.
hmm Yeah, well, that's that. Yeah, it can get really expensive, which is kind of like the reason why I also think that like some people like want to be video creators, but they kind of give up at the very beginning because of all the expense of the costs, and they really can't monetize their content quickly enough. I mean, just to throw another crazy statistic out there, 57% of Gen Z, so only 2 billion people, right? They want to become, yeah, they want to be video creators. So this is kind of something that Philip and when I go around the town, I see Gen Zers. They're always with their phones and they're always doing video content. So like, I mean, it's the most popular profession for Gen Z, to be honest, like video creators. And the current platforms right now, like, I mean, 98% of video creators live below poverty line. The current platforms out there are not made for these people to really turn this into a profession. I was a bit disappointed that current Web3 platforms have not solved this problem because, like, there are other Web3 platforms, right? For video, there's Odyssey, there's DTube, there's DLive. But unfortunately, they really have not solved the problems, right? I mean, engagement rates on those platforms are actually lower than YouTube and Twitch, if you can believe that. And they all have ads. Like, I just personally believe if you have ads on a platform, that just doesn't work out that way, unfortunately. So that's going to be very interesting on how we fix that problem. Um,
Yeah, I think it's tough because unless, I mean, of course, we're going to experiment with Niftgen and see how that goes, but unless you have a complete subscription model, the only other way to really generate that revenue is through ad revenue. So, and I think maybe they could pull it off, but I think YouTube, for example, would have a hard time getting the majority of their app users to be subscription users as well.
Correct, exactly. And like kind of like one more like statistic, which then brings me on to the next question, is that the main reason why video creators like struggle to monetize content on YouTube or Twitch is because they have low engagement rates.
Yeah.
Now, the average engagement rate, it's only 2%. If you have a 5% engagement rate, it's like you should be the happiest person in the world. Like that's a really amazing metric if you have 5%. And I think this is something that my co-founder Philip always said. I'm like, what? I mean, if you're in school and you have 5%, you should be crying, right? I mean, that's a double F minus. So why do you think engagement rates? Because I have my opinions, but I'm curious to hear why do you think engagement rates are so low? Because if YouTube really is this great platform, then everyone should be super engaged. But that's not the reason. Why would you think that is?
You know, it's really hard to speculate because you could speculate it's on the user end, you could speculate it's not on the user end. It's really hard to know because it doesn't seem like any video platform has really figured that one out. So maybe it's the incentive structure. I'm really. I think people much smarter than me have been trying to figure out that very exact question for quite some time now. So I couldn't give you a solid answer. But as somebody that's creating a video platform, what are your opinions?
Yeah, so I mean, one is that the like ads definitely don't help, right? That's for sure. Like, I mean, when you're
Yeah.
watching a video and you have to watch like a 20-second ad, I mean, so me personally, I just click close, and many
Yeah.
people do that too. Also, I mean, the main reason is that I personally think is that users are not rewarded for the amount of time and effort they go in. So, like, let's say that I'm watching YouTube, right? I mean, and because I like to watch content on YouTube as well, but sometimes it's just like, am I really going to get good content or am I just going to waste my time? And time is money, right? Like,
Right.
there's really no incentive for me to spend a whole day on YouTube or like just watching stuff. So on Niftgen, one of the cool components that we have planned out is rewarding users for the amount of time and effort they put into engaging with the videos. So like on Niftgen, the end goal is for like when you watch a video, click, comment, or rate, or like how much of the video do you watch? Is it 50%, 80%, or 100%? You'll be rewarded with X amount of Niftgen tokens, a utility token, which then you can use this token for many other things, like access special events. Let's say I'm just making a number up, right? JD, you say, hey, you want to do a one-on-one session with me, your favorite creator, you pay 500 tokens, and then you have like a one-on-one session. Or you get to use it to vote on content creation, which we have many things down the road. Like, that's what I think it's really going to change the game, because I believe users, if they're not rewarded for engaging, they're just not going to bother to engage.
Right. Yeah, no, I completely agree. And I'm trying to look at some of my engagement stats over here currently. Let's see if I can pull this up. Awesome. Okay, so this is my video with Anthony Scaramucci. It's one of my most viewed videos, and obviously it's above average. But even then, like this is the amount of people, the retention of the video throughout time. I don't know if you can see
Uh-huh.
that. I'll zoom in a
Yes,
little
I
bit.
can see. I can see. So, yeah. So by those standards, you are doing absolutely fantastic. By those standards, I mean you're essentially the top 1% of video. Wow, that's extremely high engagement right there.
It's wild too because saying that and it is like you can see the shaded area too, which is above typical retention. Uh,
Mhm.
but even that is still lackluster. I mean, by the halfway point of the video, we're at a little over 40%, which is good. 46%, which is good, but it's also it's this drop right in the beginning that's always the most insane.
Correct. Exactly. Exactly.
And that's honestly likely when they get their first ad, as you mentioned.
Yep, absolutely, 100%. That's the main drop right there. So right off the bat, by not having ads, it's gonna really help. But also, it's gonna be like I'm a huge believer that I call it engage to earn, is if we want to call it that, right? So it's like engage slash watch earn, right? So I mean, we really want to incentivize people because, like, let's say if you have like an hour long video it's very hard to make people sit down and watch you for an hour. So I strongly believe that the more you watch of that video, the more the rewards should be. And we're going to experiment with that, right? We don't know if everything's going to work out right off the bat, but Philip and I feel very passionate about this project and definitely want to solve this problem. Because again, it's a ginormous problem. Like, think about
Yeah.
2 billion people want to enter an industry where almost no one's making money. So I mean, to me, it just makes perfect sense to do it.
Yeah, absolutely,
And
absolutely.
kind of like to switch off topic and everything, because I'm not gonna lie, this week was probably the most volatile week I've ever had in the crypto industry for all the time I've been in it.
Right.
What are your I mean, we saw FTX pretty much just slowing withdrawals. Then we saw FTX say they cannot do any withdrawals. We saw Binance offering to buy FTX. We saw them backing out of buying FTX. Now we have FTX declaring bankruptcy. So it's like, I guess, like, what happened and where does the crypto industry really go from here, right? I know it's a very tough question to answer, right? Because I mean, I think just to say this out to the viewers, we're still building, right, an Algorand. So it's not like it's not like all the crypto projects in the world are collapsing, right? I mean,
Right.
here at Algorand, we're still, and not just on Algorand, on the other blockchains as well, we're still building. So we're always going to be here. As I like to say, hashtag Algorand delivers. So it's like, what are your thoughts about the whole FTX Sam Bankman-Fried situation? Just like very open-ended question. What do you think about it?
Yeah, this is certainly going to be a tough one to answer in just a little bit of time, but it's certainly not good. I'll preface it with that. I'll also preface it with saying that because the ecosystem, or the crypto ecosystem at large, is so big now comparatively to how it has been in prior cycles, it does seem like this is probably the most catastrophic event that's happened in crypto, just on sheer amount of money alone. But I do actually believe, based on size of market share, I do think the Mt. Gox hack of 2014 was actually, by percentage, actually much more catastrophic than this. But of course, the ecosystem has developed. There's going to be a lot more contagion, and we saw it after the Terra Luna fiasco, that it took about a month or two before we really realized all of the contagion that follow affected. So then it was about a month later that Three Arrows Capital went bust, and a couple other exchanges and lending platforms also went bust because of it in the coming weeks. So that's pretty much what I have my eyes on currently with the FTX situation. I think FTX is a new exchange, so I'll say that the crypto market was fine before FTX appeared in the ecosystem, and I think the crypto market will be fine post FTX as well. And same with all these other organizations that might be affected due to contagion, and we're already seeing that with the likes of BlockFi, who just recently suspended withdrawals and will likely, in my opinion, also probably enter into a bankruptcy proceeding, because I think they're insolvent as well. Usually the first signs of insolvency are halting withdrawals. So that being said, the ecosystem, those companies are new, and crypto is not that new anymore. So I think overall the crypto ecosystem will be fine. But I do believe that it set the adoption of blockchain technology in general back probably 2 to 5 years, and it also invited regulators to come in much more heavy-handed than they otherwise would have. And there's already a lot of enemies of crypto, if you will, in Congress that are using this to their advantage to basically be like, aha, I told you we should have, basically regulated them out of existence. So it's not going to be good on that front. I do worry what type of heavy-handed regulation will come out of it. I suppose the only blessing on that note would be the recent midterm elections, where I believe the Republicans are likely going to take over the House. They haven't got the Senate, but there's going to be a divided government. I don't want this to be political. I'm not choosing a side, but I'm just saying a divided government is likely not going to get anything done. So there's a chance that even if somebody does come in with heavy-handed regulation, it might not pass regardless, because you have a divided House. And you have it, so there's a chance that nothing actually does come from it over the next couple of years. But that being said, it's certainly, I feel for the people that are hurt, especially the ones that lost a lot of money, that have money tied up in it, maybe projects that were doing the right thing, but also are affected by the contagion, and maybe they won't be able to build anymore. but it's tough, and I also think it hurt the perception of crypto as well. So I think, it's going to be a couple of years before retail comes back into the mix.
Gotcha. No, yeah. So I agree with you on many of the points you said. So it's terms of like there was a crypto before FTX, and we're gonna be fine after they're gone. Which, well, they are gone. They declared bankruptcy, but we're gonna be fine with it. I mean, people are still building, like the builders, the founders. Like we're still here. We're still building our projects, right? So we will come out of this stronger. That I'm 100% certain and convinced of it. And I do also agree with you is that the bad thing that's going to come out of this, in my opinion, of course, I don't have a crystal ball, it's going to be the potential regulations that could come out, especially in the United States, because which to play devil's advocate, I mean, they're like, well, I mean, look how much money people lost this, right? So something has to happen. So it's just like, I mean, kind of like to echo what SBF, Sam Bankman-Fried always said, it's like, if regulation is going to come, we have to hope that it's like good regulation. Now, what does that even mean? I don't know, right? Because good regulation is very vague, right? He always used to say that like good regulation, but that's very subjective. Yeah, so like
Well,
it's going to be, you're going to say something?
yeah, I was just going to interject and say that the tough part about that, at least in terms of SBF, Bankman-Fried, is that uh, his idea of good regulation was pretty terrible regulation, in my opinion.
Yeah,
And from what it seemed, he was working behind the scenes to essentially lobby against his competitors in the industry, and basically also lobby against DeFi as a whole, essentially, which is mind blowing to me. So uh, behind closed doors, he was no friend to crypto, and I guess those fruits have come to bear, I guess.
yeah, no, I agree with you. I mean, I personally disagreed with like almost all the propositions he made, which I was very surprised when he said like essentially like many of the like the bit license in New York, right? That everyone has to have a bit license and stuff like that. I mean, again, I don't have a crystal ball, right? And I'm by no means like the smartest person in the room, far from it. But I just disagree with all those regulations where like you're taking the power away from decentralization, because I mean Web3 is all about decentralization, right? I mean if you take that away, it's like, I mean you're taking away really what makes Web3 special, which kind of like brings on to like the next question that I wanted to like ask is the idea of like not your keys, not your wallet, not your keys, not, I'm sorry, right? It's like this whole thing about like centralized exchanges comes up, and like many people say, you have to be careful about leaving your crypto in a centralized exchange because you don't really own it.
Right.
But to play devil's advocate, and here's kind of like the conundrum, right? The next 1 billion users that we're trying to onboard, not even the next 1 billion, the next 500 million, they don't want to deal with private keys, right? So you and I were pretty good in crypto, right? We're used to having several crypto wallets. We know how to manage our private keys and everything. The next 500 million users don't really want to deal with it. So the kind of question I have, which I don't have the answer for, this is something Philip and I talk about very frequently, is how do you square that circle whereby how do you get the next 500 million users into crypto but not in a centralized exchange where pretty much they need to get educated and do everything. Like, how would you think that circle can be squared? I know it's a very tough question to ask.
Yeah, I mean, I suppose you just said without all that extra education to get them to do so. I mean, I suppose without that, it would have to be some sort of service like what Vendable is working on with Trustable. I know they're working on their private key protection plan, and ideally, if that goes well, you won't even have to hold on to your private keys. You still should. I mean, it just for a good safety measure, you still should anyway. But if it works the way it's supposed to work, you technically wouldn't have to. You could just go back and enter in your biometric data that is connected to your account and get back into it. So maybe it's solutions like that with decentralized identity solutions that can pair your personalized data with an account and get you back into it. But I don't know. That is a really tough question because I do think centralized exchanges although they serve some function in the ecosystem currently, I do believe that the concept of decentralization necessitates us not being reliant on big centralized institutions that basically are the market makers at this point.
Correct. No, yeah, pretty much. I agree with you. It's like Bendable, they're working on something really, really great. Like we're gonna integrate them into Niftgen because, like you said, like the idea that you don't have to worry about losing your seed phrase, that's definitely fundamental. So they're definitely doing something that's gonna make the onboarding process easier for sure. And yeah, the whole stuff about like centralized exchanges is like you said. I mean, the whole point of decentralized is for you to not be dependent on a centralized authority, right?
Right.
It's just that some people, crypto is scary for many people, right? So it's going to take time. I mean, Rome wasn't built overnight, right? So it's definitely going to take time. And we're extremely early. I mean, in the industry, I know we talk about like all the stuff that happens in the crypto space, but we're very early. I mean, I think in the world there's probably not even 50 million crypto wallets that have been created. So I mean, that's like a very low percentage of the world population, since we have 7 billion people.
I think there's been more than that created.
More than created, more than 50 million. Okay, so like definitely under 100, I would say.
I would argue that probably more than that, because a wallet is the same thing as an account. There have been almost 29 million accounts opened on Algorand alone. Now, not all of those are active accounts. There's not even close to 28 million active accounts. There's probably like, maybe in the thousands of active accounts, but total accounts that all have like 0.001 algo in them, at least it's like 28 or 29 million currently. You know what? Because on this first thing I look up, I wonder if they're looking at active wallets and not total wallets, because it does say on the first thing I look up that it's about 84 million worldwide as of August 2022. But I wonder if that's active accounts, because there's definitely more wallets. You can even go look at Ethereum, and there's a bunch of wallets that have been created, but that doesn't necessarily mean active accounts, especially when you consider that maybe it's also aggregating the fact that it says crypto wallet users, and some users like me have 7 or 8, 9 different wallets, and they might just kind of classify that as one user.
Correct. Yeah, exactly. Yeah, because like there's a difference between like, because people can have multiple wallets, right? And some people
Right.
create a wallet and they never use it. So in terms of like how many people are that actually are really engaged into crypto, right? Like buy NFTs, exchange
Right.
algos for fiat, stuff like that. It's very few. I mean, I would say in terms of like active, engaged crypto users, I would say less than 100 million for sure, without a
Uh,
shadow of a doubt, even less than 50 million. So if you include the world population, that there's 7 billion people, we're so early. We're so early. Like it's really the beginning stages. So it's just going to take time to get people comfortable with it. I mean, it's definitely easier now that we have more blockchains. I mean, like, well, I mean, it's easy now that like for and transaction fees are less than a fraction of a penny. You can actually do stuff. I remember
right.
the first time, my first exposure to Ethereum when I wanted to buy like a $5 NFT, and the fees were like $200. I'm like, okay, so I'm never using blockchain again. So it's good that now we have stuff like Algorand where you can actually do stuff and not go bankrupt.
Yeah, I suppose so. The pushback that some of the Ethereum people will say, which is honestly funny because I've seen them doing this during the bear market, is they'll be like, "Oh, the current Ethereum fees are only like $4 right now, $5," and it's because it's a bear market. The congestion isn't there. Before, during the bull market, and people were actually using these chains, Ethereum was congested. So that congestion creates basically a bidding war with gas fees, and then the gas fees go through the roof because you're essentially bidding to get your transaction into the mempool. And since that's not happening right now because there's not enough competition to get into these mempools, because there's not that many transactions, fees are low. But even $5 is uh, incredibly expensive when you're thinking about daily payments of something or micro payments of something. But even still, just to use that as an argument is very humorous, if you ask me, because if nothing's fixed between now and the next time there's a bull market and there's a lot more excitement and transaction volume, those gas fees are going to go back through the roof.
Yeah, absolutely, completely agreed. And like that was one of the things the industry in general had to get like solve is like get transaction fees low. Well, switching from proof of work to proof of stake as well. Like I know like Ethereum switched from proof of work to proof of stake, so they're greener. Transaction fees are still extremely high there. They haven't solved that problem, but it's good to see the industry moving in the direction of like becoming greener, transaction fees eventually becoming very, very cheap. Because if they didn't even get that right, the industry was just not going to go anywhere. So I'm happy to see that happening in the industry. I believe I covered all the questions I wanted to ask for the interview. So like I just wanted to just say like some closing thoughts. So like for everyone here, it's kind of like going through this very turbulent time in crypto. Just to like to give you guys just like words of encouragement. The builders, then the founders, and like the innovators, we're still here. We're still working really hard to get our products out there. So we will get through this. I mean, we've been through several downturns in the past, right? It's not like this is the first, like this is not the first crypto winter, right? We've been
And it
through
won't be
many
the
other.
last.
Nope, it will not be the last. Exactly, absolutely. The one thing I would say though, it's kind of like the good thing about the crypto winters is that the projects that were made just to like for speculations and stuff like that, those are really the projects going belly up. And some of them, let's be honest, I call them Ponzonomic projects, right? Right? So those are the ones that are really going to go extinct during crypto winters, which I know it's a bad thing to say, but it's a good thing, right? They're not going to be around because that means they're not going to like hurt other people in the future. So kind of closing thoughts, I'm optimistic for crypto long term.
Yeah, and to echo that point, I mean, markets, they go through boom and bust cycles. We see this in every type of market, not just crypto. I mean, of course, crypto is more volatile, but that's actually kind of a product of it being uh, such a low market share of other assets in the world. So, like a smaller amount of money can essentially move markets in a larger direction on crypto than it can on, say, like a heavily funded stock exchange or something of the sort. But regardless, to your point, it really does flush out the bad actors, which I think is absolutely necessary for the space because, as you can see, these bad actors cause things to implode. And I will also just say, as somebody that looks at charts and somebody that thinks that this last capitulation event could be, I don't want to call it a bottom, but it could be bring us closer to a bottom. And if you look at charts, the first Bitcoin boom and bust cycle brought Bitcoin down about 88% from its high. The second one in 2017, 2018 brought Bitcoin down about 83% from its high. And this current cycle, the lowest Bitcoin has been is about 77% down from its high. So you have on the one hand, and you also see this during the bull market, you have diminishing returns where the first round it was like, I don't know, something crazy like 10,000 or 20,000%. And then the second bull market it was maybe like 2,000%. And then the third bull market it was only like 300%. So you have diminishing returns on one hand, but you also have diminishing lows on the other hand. I'm hoping we can keep that consistent where, the first bear market, like I said, we hit 88% low. The second bear market, 83% low. If we can get a little under that, where we hit at 77, but maybe if we can get to 80, that'll just continue that trend. And then next cycle, it's less and less and less. And as the ecosystem not merges, as the ecosystem matures, it'll get to a point where it's sort of like the stock market, where a 3% move in the day is actually like a big day versus like a 10% or 20 or 30% like it is in crypto. So I do think the lows and the highs, and you see it in diminishing returns over the years. So I do think over, maybe the next 10 years, I'm not sure how quick it'll happen, but I do think over the next decade or so, the ecosystem will mature to a point where it's not as volatile at all. And I do think that is something to be hopeful for. And as you said, there's a lot of projects that are building. I'm trying to build out this channel over the next couple of years. You're building out a great project at Niftgen. I talk to many people in the ecosystem that are still heads down building some projects you'd never even heard of that are waiting to come out in better conditions. So uh, I think it's going to be really interesting, and I am excited for the future, regardless of some of the bad stuff that's happened over the years.
Perfect, perfect. Yes, I'm excited too. I'm very positive. Let's end the show on that note so we keep the positivity up.
Absolutely, let's do it. All right, wasn't that fun? I hope you found out a lot more about myself. I hope you found it interesting. And if you did, smash that thumbs up button if you haven't already. Consider subscribing to the channel and check out the video description for ways to get $25 towards your next investment in real estate tokenized on the Algorand blockchain. I have a lot more episodes coming out, including a video with the global head of business development and capital markets at the Algorand Foundation, and a whole lot more. So be sure to subscribe. Hit me up in the comments down below, ping that notification bell if you haven't done so already, and we'll catch you in the next one. Thanks.